From the floor of the CME Group, this is Danny Riley with today's midday update. The name of this video, S&P Stop And Go. The high of the day in the S&P came in at 1923.30 recently. The low came in at 1905.30 early in the day. That's a Mr. Top Step 20 handle rule. And last, we're 1918 even. We're up 5 handles. In fact, we're kind of down ticking right now. Total volume, 1.1 million. Big 1.1 million minis trade and 1.2 thousand big S&Ps traded in the pit. I don't know. There's all sorts of headlines going on right now. Gold's popped because of the Ukrainian risk and the Russian-Ukrainian risk. But here, I want to talk about something. And it's based on how the S&P closed yesterday. Now, one would think the way things went out with the trend like that, the S&Ps would be lower. They were. But when we came in this morning, there was big buyers off the open. Now, again, I think this has got a lot to do with the algorithms and people getting short before the open, putting in buy stops, and the algorithms chasing that. But the other side of this is we've had 6 straight days of sell imbalances, and it looks like the S&P is trying to hold a little bit here. I don't know why. But the real thing is here is all the Russian risk. If they go over the border, they start knocking out some Ukrainian jets or knocking out some tanks or anything like that, the S&P is going to drop 30 handles in a couple of minutes. Now, the levels that we're kind of looking at right now in the S&P where the resistance comes in on the upside, we think 1833 to 1838. And then above there, we've got 1850 to 1851. But should the S&P start to flunk a dunk, and it does, it's got this scary tone to it. I mean, everybody that we're talking to is a little bit on edge. But if it does decide to flunk and start to take out these lows from last night, we think 1883, 1885, and then all the way down to 1860. That would be where the major support comes in. That said, it's a midday update. We'll see you guys on the cash close.